are strongly committed to achieving the monetary policy goals that Congress has given us.
Fed Jerome Powell just pulled a rug pull on the marketplace, giving us some information we were not expected to hear. This has huge implications for the stock market and something we have to cover here in this video. AMC is obviously down 11.5%, so no time to panic. My personal opinion, it's time to buy the dip. But how low is AMC going to go? Are we going back to 20? What is the data telling us? Could we break 20? Who knows? That's what we're going to talk about here in this video. By the end of the video, you will have a clear picture of what is going to happen next with AMC stock. So let's not waste your time or my time. Let's get into this video. Hit that like button for me. Consider subscribing to the channel as well. So let's get straight into it. The markets are clapped today. No other way to put it. We got beat into the ground. The NASDAQ is going to close down over 3%. Russell 2000 going to be at almost 3% negative. S&P down 1.62%, and the Dow Jones itself almost down 1%. This is a massive gap down in your tech stocks, your small cap stocks. That is why you guys are feeling the pain today, just like I am. Let's go over this rug pull situation because that's the best word for it. We were not expecting this information that we did get today. And if we do pull this up, Federal Reserve puts wheels in motion for balance sheet reduction. We did not expect that to happen, Jerome Powell. Essentially, let's read the key points and then let's break this down a little bit more. And I want to give you guys a short thesis on this recession I see coming and ultimately what is happening with AMC. In this last couple of minutes, you can see the 1 minute candlestick chart, we've kind of been recovering just a little bit, about 50 cents. Whereas if you pull up the S&P 500, we have been going down. So you're seeing AMC going up, S&P going down. Hopefully that trend continues. We'll talk about that more in just 1 second. Back to the key points. Minutes from the Fed's December meeting indicate that officials are ready to dial back policy help aggressively. One key aspect, the central bank's balance sheet, was the subject of extending discussion, with policymakers pointing to a reduction in bond holdings in the coming months. Members expressed concerns about inflation and said the jobs market is nearing full employment. Stocks slid following the release while government bond yields rose. So essentially what they are doing and what they are saying, if we come back down here, it says while officials did not make any determination about when the Fed will start rolling off the nearly 8.3 trillion in treasuries and mortgage-backed securities it is holding, statements out of the meeting indicated that the process could start in 2022, possibly in the next several months. So instead of the Fed coming in and buying these assets, treasury bonds, mortgage-backed securities, accumulating these through quantitative easing, they're going to start selling them into the marketplace. That's going to mean rates are going to go up at an even faster pace, thus killing tech stocks even more. And this also could lead to an inversion of the yield curve, something we have talked about many times. And we'll get into that in just 1 second, but this was essentially a rug pull. Nobody expected this kind of verbiage to come at this moment. We are heading into a time of virtually no stimulus. Yes, we do have high inflation, but I think it's expected. Inflation is supposed to go down towards the end of the year. Federal Reserve's expectations for inflation is about 2.5% by the end of 2022. A little bit higher than where they'd like it, but still not too crazy hot of an economy. What they are doing, in my personal opinion, is they are going to crush the markets into the ground to get inflation under control. And then what they're going to do is swoop back in and start cutting rates again toward the end of the year, if not early 2023. And what that is going to do from now until we do see the markets just totally start to crumble, go down 10-20%. I personally think a small recession is likely to come due to the number one factor that caused a recession, spending slowing down. That's exactly what we are going to see. And in between the time from now until that happens, that's when you could really see the MOAS, because the liquidity is starting to be restricted as even stocks are selling off. And that does not mean AMC is going to be immune to a sell-off. AMC is likely to sell off with the broad markets as well. Heading into the last 2 minutes of trading today, AMC making a move down, as well as the SPY making a substantial move to the downside. But we have been buying some puts in the trading community. If you guys want to sign up for that, that is down below in the description of this video. For the Patreon, we put on a Facebook put today that yielded us 50%, an AMD put that was up 20%, closed down 6%, but a BABA call yesterday that yielded some members over 100%. I sold out a little early because that's what I usually do, but still, hey, if you guys want to be a part of that, check that out. Now back to AMC. We are seeing a little move to the downside in after hours, seeing some quite substantial candles relative to what we usually see in after hours. But let's pull this out to the daily candlestick chart. What is going to happen next? That's probably what you guys are wondering. We did slow down a lot during this sell-off at, about $23 per share. So what I want to see is, I obviously want to see a bounce above $23 per share. Is that going to happen? Well, we are seeing, like I said, that slight divergence between the end of the day close today and AMC going up, and the SPY that has just been going down, including in after hours. So I do think it is possible, like we seen last January, where the markets were going down and meme stocks, your AMCs, GameStop, those other stocks started to go up. That could happen. But where I would personally put my money, if I had to, if I was forced to, would definitely be a move down to about $20 per share. But I don't exactly expect us to go to $20 per share. I do expect to see a lot of back and forth action between where we are currently at right now at almost $23 per share and $20 per share. I mean, at the $22 price flat, the $21 price flat, those are going to be the hardest levels to break too. If we get down to 20, you're likely to see a lot of buyers come into the stock from institutional money as well and start to prop AMC back up. I don't expect a move under 20, but that is certainly possible for whatever reason, guys. For whatever reason, I'm not forecasting this, but if we do make a move under 20, your next level to be watching for is about 1850. I'm not even going to mark it because I don't expect it to happen, and I would be very surprised if that happened before we could forecast it. Like, wake up tomorrow, we're at 1850. Highly doubt that would happen, but that would be the next level to ultimately go to. Now let's briefly pull up the Ortex data, get a picture of where we currently sit as far as the shorts are concerned. We're looking at 17.14% short interest of free float, not really showing much short positions today we're taking on, but we know these estimates must be taken with a grain of salt. Obviously, if AMC is dropping 11% on the day, close to 11%, there's a decent amount of shorting that has to be happening to cause that drop. We are looking at current shares that are sold short, about 87.96 million shares. Keep in mind, like I say all the time, I think the short interest personally is in between 40 and 80%. Share utilization is at 75.85%. Days to cover at 2.43. That is going up yet again. Still, like I say in every single video, this is a ticking time bomb waiting to explode, baby. Stocko tracker data not looking so good as well. If we go ahead and pull that up, just a depressing amount of calls that are in the money expiring on Friday. 1,200. That is it. Only 1,200 calls. Out of the money calls at almost 139,000. This could set us up for a bounce coming on Friday. I don't know if I would place my money on that, but it is possible because we have so few calls that are in the money, and we have a lot of puts that are in the money and a lot of calls that are out of the money. So as puts run from into the money, out of the money, the market makers have to buy shares on the open market to de-hedge for those puts. And at the same time, as the price of the stock is going up, calls run from out of the money into the money. That is a double-ended source of buying power. So two sources of buying power potentially from the market makers. Keep that in mind. I wouldn't hold all too much weight on it just because we kind of got rug pulled today by Fed Jerome Powell. So thank you for that, Powell. We are looking at maxpain at about $27 per share. That does indicate about a $5 move from where we are currently at right now. Well, about a $4 move because we're at almost $23 per share. Still, a substantial move as far as the maxpain is concerned is coming. So that is the situation. What is the volume for the day? 44.5 million shares that traded hands. Not too high of volume, so keep that in mind. Volume is not really picking up at the same rate as we are dropping. So once we do get bullish volume that comes into the stock, I do expect that move back to the upside. This stuff is very, very simple, guys. If you've seen high volume on these days the stock is selling off, not good. Low volume on days the stock is selling off, not too bad. Once that volume switches and bullish volume comes into the stock, whether it's, medium or high volume, you're going to see a big move to the upside as well. And really 44 million shares that traded hands for volume on the day and a 10.75% move, that's crazy. That is nutty. And as far as the MACD as well, starting to go bearish, so not a good sign right there. Bollinger Bands, we could see 20-day simple moving average is way up here at about $27.38 per share. So not too much good news to actually go over here in this video. There is some silver linings, like if we do get a bounce, we could see a mega bounce by the end of the week. But that is going to do it for this video. That is all you guys need to know. Get you guys the info you need without taking up too much of your time. So if you like videos like this, hit that like button for me. Consider subscribing to the channel. Let me know in the comment section, what do you think we are going to do next? Do you think we're going to break 20? Do you think we're going to find a lot of support around $20 per share? Love and appreciate you guys. Thank you for watching. I will see you in the next one.